what we do, and who Kenekt is, and what some of the property examples that we've got. But today, primarily, we're discussing South Australia. We have a lot of stock on our portal, so yeah, we'll get started. So, who is Kenekt? Kenekt are primarily a B2B property investment portal supplying turnkey tenant-ready investment property now in all states except for Northern Territory, and we work with handpicked builders and developers to supply primarily house and land packages. We're not investment, we don't provide investment advice, we're not an investment club or anything like that. We're primarily a property supplier. We have about 50 suppliers currently, which is growing, and we're in, as I said, all states except for Northern Territory, and even Tasmania. So if we can get started with an overview on South Australia. I've just updated some of the stats yesterday, and some are pointing a little bit higher than this. If you look at CoreLogic, that says the median price is about $9.45 at the moment. But South Australia has been growing, and that growth started actually before COVID. So we saw a little bit of growth prior to COVID with people coming back to South Australia with all the employment growth happening. So we were the worst performing state in Australia for nearly 20 years, and we're now obviously the best at the moment, the last few years. So the median house price has grown from about 880. Growth forecast, depending on who you look at, but we're tracking between 4 and 5% growth in property value, and rental yields, more importantly to us, at about 4.2. Our vacancy rates have been under 1% for quite some time, probably the last 5 or 6 years. But currently it's still sitting at 0.8% vacancy rate, and growth rate for housing, more importantly for us, is 7.4%, so quite strong growth yield. And this is on average around South Australia. Obviously different regions vary depending on stock supply, but that's about the average in South Australia at the moment. Rental growth, housing to units. So obviously with housing costs growing up so high, units are starting to gain a bit of more traction, so units and apartments. But housing growth is still quite high. Elizabeth Downs area, for instance, is probably one of the best performing areas, and that's due to obviously employment and industry growth. So the market outlook for investment properties. So some of the takeaways, obviously market performance, still low vacancy rates, and units or apartments are starting to gain a bit of traction. We still have high tenant demand, fueled by interstate migration. So still getting a heap of Victorians coming across, but also as our services demands rise with infrastructure and what's happening in the marketplace. Obviously, where the government's spending a lot of money, and we're trying to get people back to Adelaide. So that growing population of young professionals is still on track to stay pretty high. We do have limited housing supply. So primarily South Australia is bordered by sea on one side and hills, and the Barossa Valley on the other side. So we go down a north-south corridor primarily, and that's it. We can't sort of go sideways at all. So we're probably a little bit different to most other areas. So investment recommendations, and some of the stats are pointing to inner city apartments, but also having a long-term strategy for house and land packages. Vacancy rates. So this looks pretty good for what we're talking about today. So Adelaide has the lowest vacancy rates in the country, followed by Hobart, funnily enough. So, and that vacancy rate in South Australia has remained under 1% for quite some time. So, and we're still getting 20 or 30 people at each open inspection for properties around Adelaide. So it's quite strong. Some of the hotspots that are focused on. So Elizabeth Downs and Salisbury North, they're the two key areas north, and supply is actually quite tight in those areas. So we're going up further into the Gawler regions, but yields are quite high too. They're up to 6% in some instances. And obviously price growth is still reasonably affordable, although it's pretty hard to find anything around that price range at the moment. But average pricing really is more like the 600 mark. So the next hotspot is primarily Murray Bridge as well. That seems like it's a future growth corridor for us. We'll go into that in detail a little bit later, but yields are reasonably high at 5%. And then you've got the Adelaide CBD as well. So the yields are sitting at 5.5%. There's a big push, obviously, for students and young professionals in those areas. So overall, residential hotspots and the analysis and the differences. You'll see here that Murray Bridge has fairly strong capital growth that sort of blows out for the next 10 years. And that's primarily because of the new stock that's coming onto the market. Murray Bridge, as a lot of local people will know, that it was a small country town, not much growth there, and now that's really taken off. And we'll have a chat about that in a minute. So, but overall, that Salisbury North is high, as also a very high growth area too, and price growth trends. So, I think now probably the average sale price in South Australia is nudging that 900 mark. In fact, CoreLogic says it's about 945 at the moment. So that's really, really taken off, that price growth. Oxford Economic Report. So this came out the other day. House price growth, apartment prices, rental growth, still strong demand, construction and demand. So we see that only by about 7% growth for construction and supply. And we lag behind house price construction in South Australia. So demand is quite high, which is good, obviously good for rentals. This our economic backdrop that the Oxford Economics is forecast is also seeing continued growth through to 2026. We're still at 2%. I think the national average is pretty low. So we're actually the fastest growing state for economic growth in the country at the moment, and Adelaide's never had that in its history. So things are changing, and obviously it's a good market for Adelaide investors. Okay, so population growth and those demands. These are some of the hot areas for growth for stock at the moment, and some of the regions that are seeing a lot of growth. So obviously the Adelaide CBD continues to see moderate growth. There's a real push for this CBD to grow. It's, they're talking about doubling its population within the next 25 years. I'm not sure we'll hit that, but anyway, and this new area is inner west Southwark. So Southwark grounds, there'll be some investment opportunity for us there a bit later on, mainly townhouses. Murray Bridge is the next hot region, and that's tipped to grow up until 2040 by about 35 to 39,000 people, which is huge for Murray Bridge. In fact, we need 7,000 new homes by 2041 just to match projections. So it's a hot spot at the moment. Noarlunga region, again, 4% growth. There's 600 homes slated there or about to be approved within this decade. So while not as much, there's not as much land there as the northern side of the Gawler region, mainly because of the wineries, etc., through there, and then the sea on the other side. So, but again, it's a region that we'll be focusing on. And obviously the next one is Gawler. So as Manopara and Salisbury's gets snapped up, there's not a lot of land vacant through there. And the next part of that growth is Gawler region. So it's another 15,000 up to 2026 for 37,000 people through there. So that's the next northern hotspot that we're focusing on pretty quickly. There's some disclaimers through there. So focusing on Murray Bridge, let's have a bit of a chat about that, because we're focusing on those areas for stock. Murray Bridge has been typically a tourism town. In the early days, it was a port town, being on the Murray River with trade going up and down the river. But lately, it's slated for growth, and the main reason is there's a lot of land out through there. and it's a major growth corridor for the government. So, and some of those, Thomas Foods, as everybody knows in Adelaide, they're probably the biggest abattoirs in the Southern Hemisphere. They had a fire a few years ago, updated their plant to 3 times what it was. And now we're seeing other manufacturing or food sector employers coming in. One of the major ones is Golden North. So Golden North, ice cream and now dairy. And they're moving into the old Beston Foods factory in Murray Bridge. So bringing in lots of employment. And armaments, so defence manufacturing. This is a bit of a new one, and this has primarily always been in the northern region of Adelaide, being near the Air Force Base. Just had this call. It's defence manufacturing is starting to move into the area. Not sure how many. Doesn't say here how many people it's going to bring, but the offshoot of that is lots of employment. And this section here, Gifford Hill. So Gifford Hill is the other side of the freeway from Murray Bridge. That's slated for 17,000 residences over the next decade, if they can find the sewer connections like everywhere else. But yeah, obviously that's a growth corridor for us in the future. And obviously with employment and major industry moving into the town, brings some opportunity for investors and renters alike. So just going through some of the property that is available. This is a new one that's come up probably yesterday. Pretty good price point, as you see, about 600K, 530 weekly rental. That's probably a bit conservative, but this is in a exclusive little estate. It's a nice 3-bedder, 2.7 ceiling heights, well spec'd. Good builder, so Elite Homes are a pretty good builder, but in a small pocket subdivision. So this is stage 1. And you'll see there's not a lot of homes available through there, and it has some private open space. It's in this new subdivision called Tudor Vale. Now these are lots that we have are exclusive to the builder, so we're not fighting with 100 other agents to get the stock. And you'll see there it's already, most of the roads are in, and there's some nice private open space. But the main thing that we're probably looking at is the amenities in the area. So Manapara has been a traditional growth corridor, and it's well-established infrastructure, well-established shopping, schools, playgrounds, etc. So it's in a very good area, 20 minutes from the Barossa, probably 40 minutes from the city near peak hour traffic. But it does have a lot of infrastructure, and this is something that we all look at as investors. So plenty of schools, plenty of shopping, theatres, etc. So quite a good location. And as I said, there's only 460 lots through here in the future. And we primarily reserved a few for investors, so it's not all an investor subdivision. And as I said, lots of private open space through there. So that primarily wraps up South Australia. Obviously, we can pull out all the stats that we can, but we South Australia, we have a lot of good stock. We have a number of probably almost, sometimes we nudge almost 200 packages in South Australia at any one time. So it's a good supplier for us. And obviously we'd like to increase the buying demand through Kenekt. Next one, we move into Hobart. So Hobart is a new area for us. And obviously that table we previewed before, it's the second lowest vacancy rates in the country. Hasn't been a big supplier of housing stock or new divisions or new building. It's certainly not for investors either. So, but the house prices are moving quite high. The rentals, even units, are getting $500 a week. Average gross yields are nudging 3 to 4 to 5%. Vacancy rates are low. Population is growing. Obviously, Hobart's a major town in Tasmania. All the infrastructure is already there, the hospitals, etc. So it's a good prime area for focus. House prices are up, so average house price is about $730, nudging 3% year-on-year growth recently. In the next 12 months, it's probably priced in to probably stay at around 1 to 4%. Market sentiment, I've said here, flat, but positive for premium turnkey and well-located homes. That's probably the key. Tasmania, as you know, is a bit spread out, and not a lot of infrastructure around the place apart from Launceston and Hobart. So, but for now, we're focusing on Hobart stock. Vacancy rates are low. Lease turnaround's pretty quick, 1 to 2%. 1 to 2 weeks. And those driving factors are the infrastructure and people relocating. There's a lot of people obviously relocating from Melbourne to Hobart, a lot of retirees. So cash flow, so yields are quite high, around 5%, nudging 6% in some pockets. And house price is the same. So house price or house yield is the same. And there's a focus on 3 to 4 bedroom family homes, but also the smaller stuff. And you'll have a look at the reasons why, the demographics. We'll go through that in a minute. Some of the areas, so depending on where it is, but the rental growth ceiling is quite high, and the median house prices are nudging that million to 1.2 million mark for some areas. West of Hobart around 800, 890, so it's getting pretty expensive, on a par with South Australia really. So, and the rents are nudging up to that 700-800 a week for some property. Amenities and infrastructure focus. So obviously Hobart's going through a bit of renaissance like most towns since COVID. Retail and shopping, obviously tourism, healthcare is a big one. Calvary Hospital, etc. So they've got health precincts they're putting up through there in Hobart. Education, the universities are getting popular, and obviously recreation and tourism. Infrastructure development projects coming on board or online in the next few years. Obviously, the new stadium, hopefully, for AFL, but also the health sector is a big one. Affordable housing, they're looking at. Obviously, tourism and education is a big focus for Hobart at the moment. Price and growth trends. So price growth was out of control, and now it's starting to show some normalisation at the moment. But as we're getting back to single-digit growths, which is a bit more sustainable levels. And the demographics. So this is interesting. So really Hobart is obviously with the health sector, it's attracting a lot of young professionals. The universities are quite strong. Families coming across from Melbourne. But this big one here, interstate retirees. So I guess there are some people that don't like the sunshine in Queensland all the time. And Hobart is probably a climate that South Australians and Victorians are probably used to. A bit cooler, so that's a big demographic growth area for Hobart, interstate migration, etc. So some of the product that we're getting on board. So this landed on our desk last night, but we've got a lot of dual dwelling stuff or duplex stuff, non-attached sites at the moment. So these are about 670, 675, depending on the block sizes. And it's 2 dwellings on one title, but it's a turnkey finish. Build time is 16 to 18 weeks, so quite quick. But the rental, if you look at the rental yield here per unit, so it's 480 to 515. So you're talking $1,000 a week for a 670 investment. There's quite good growth there. So as I said, they're fully turnkeyed, basic floor plans, etc. Subdivision's all done. There's a lot of green open space, and backed up through here, there's a private park or public park being developed by the council, so that's all through there as well. And the block sizes are quite good, so you're talking 800 square metres there. They're 740, 680. So the block sizes are quite large and not on postage stamps like a lot of the stock in South Australia, for example. But they're all spec'd up to move in. So you'll see they're all done, and they're all turnkey. So all your plumbing, all your site works are done, energy reports are done, everything's sort of in that price. So And the area, so New Norfolk, it's primarily been a tourism destination, and it's starting to get that growth as Hobart spreads out a little bit. So it's 35k generally along the freeway from Hobart. So it's a pretty quick commute. It takes about half an hour from Hobart to New Norfolk, for example, um, straight up the freeway. So, and it also has the infrastructure already there. So primary schools, high schools, shopping, etc. It's on the Derwent River, which is nice, obviously. And it does have that tourism amenity as well. So, the hotels and shopping, etc., and healthcare is already there. So it's a good area, good infrastructure provided. Rental market is strong, and obviously investment opportunities there. So, and primarily all our developers go and seek independent rental appraisal. So all our property that we provide, if we've got the time, if we've got quick enough time to get that organised before it gets sold, but we do have independent agents that appraise property in the area. They're generally a little bit conservative because there's a little bit of risk there with what they're offering, but they may be, maybe another $50 a week into that sort of price there. But they're all independent. We don't do it. We don't go off and guesstimate. We get independent agents to do that for us. So that's primarily about it. So, as I said, we do have a lot of packages. If you want to call or discuss anything, just punch in your details, your phone number, or in the chat, and then we'll primarily get back to you as soon as we can. So, just keeping things nice and short during the working week. Or if anybody's got any questions now, stick your hand up and I'll unmute you. But yeah, that's primarily about it. So just put your contact details or your name. If you've registered, we'll find out your contact details. So any single contracts, build time in Tassie, 16 to 18 weeks from the time of the titles are ready. Titles are getting titled now, or they're taking 6 to 8 weeks to get titled, and then they 16 weeks from title stage. So any single contracts. I can't write in the chat. Oh, okay. Single contracts we don't get a lot of, and the issue there is valuations as well. So we certainly don't have any in Tasmania yet, but in South Australia we do have some single contract product available now and again, not all the time. So, what's the driver of growth in Adelaide? Yeah, so we went through South Australia growth, obviously infrastructure, defence, and industry. So a few years ago, South Australia focused on AI and space, so in defence. So we had an old public hospital that was disused and shut down and rebuilt, but it was vacant for 3 years, and the previous government focused on that area. So it's a major tech hub. One of the buildings there, one of the companies, Accenture from the US, has 6,000 staff moving into that building that's being built under construction now. So, email you some stock. Yep, sure. Vacancy rates, Bruno, are under 1% in both regions, so both South Australia and Adelaide. So quite low, and they have been in South Australia even before COVID. Vacancy rates have always been low in South Australia. So primarily because of that landlockedness, we're either north or south. On the west, where we've got the sea, and on the east we have the hills, so which is basically farmland. So email you some stock. Tassie dual unit vacancy rate. Yeah, basic vacancy rates are low in Tassie, and I'm not sure whether there has been some of this dual unit product available, but I don't think so. So there's probably no stats on it yet. we've certainly only had that stock for about 2 months now, so they've only just got the next lot coming online. So there's probably not a lot of it. Whether the government or council has changed the laws there, like they're trying to do to encourage more construction, which they are everywhere. I wish we had some 2-bedroom stock available in South Australia because it'd be very popular. So is it? Yeah, so Murray Bridge, major infrastructure projects, less amenities, what drives Murray Bridge? We kind of went through that. So Murray Bridge, as I said, there's Thomas Foods. Thomas Foods are the largest abattoir in the Southern Hemisphere. They're also building another section of that abattoir for, what do you call it, man-made protein product. And that's primarily for the overseas market. That'll virtually double the workforce by 30%. As I said, there's some major subdivisions going through Murray Bridge, and also now defence. So I'm not sure why they've chosen Murray Bridge rather than north of Adelaide, which a lot of it is. But yeah, they've chosen Murray Bridge. So that's another major employer. And also the offshoot of Thomas Foods is more food type projects. So going ahead, and one of them is Golden North Ice Cream, which are pretty huge. So yeah, Dilip, I can send you some more stats on Murray Bridge if you like. I'm not sure when we're getting stock, but certainly we'll be in the new year for Murray Bridge with everything sold at the moment. So it tends to fly out of the shelf. So I guess from a BDM point of view, watching some deals go through, we need to have the clients pretty well ready. Stock comes on, and by the time we read it, sometimes it's sold. So and we're getting more and more as Kenekt grows. So does our agents that are online, and inquiries grow. So we need you to have your client ready, do your consult, get your pre-approvals done for finance, get the EOIs in. Soon we'll be requiring, or the government's requiring us for IDs, etc., and we ask for that for all holds. So yeah, and we're online. We're starting work at 8 o'clock and finishing late at night sometimes. So we tend to get things reserved pretty quickly. We find out whether, so once we send you the brochures, we find out whether that stock's available, and then we let you know, and then you can proceed with your clients or proceed with your inquiry with us. So yeah, I think that's about it. So unless you've got any further questions, as I said, feel free to give me a call for South Australia, Tassie. And my email's there too. But if you've registered, I'll be calling everybody to have a bit of a chat about property and what's coming on the market. But keep your eyes out for those emails and SMSing for new stock that comes online, because it's coming on thick and fast. So I think as the government's changing policy, like Tasmania has, there'll be more good stock coming on the market. A lot of off-market stock, and a lot of developers, it's quite crucial because they're having to pay for water and sewer and things like that up front before division goes through. It's quite crucial that they get some sort of pre-sale. So we'll be having lots of early stock coming onto market before it goes to market, so which is good. Okay, I think that's about it. So unless you've got any questions, but I'll call each of you. As I said, my mobile's there and my email is there. So if you want to have a chat about any particular property or got any questions, feel free to contact me. All right, we'll leave it at that. Thank you, Chum.